Hey everybody, Jeffrey Bamer here, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. If you have been with us for a while, you know what we do here. If you're not familiar with us, we don't just talk about stocks around earnings. We talk about their estimated movements and how to make money off of an earnings announcement for each and every stock that we talk about. Now, this week, the week of March 17th, happy St. Patrick's Day. It is Monday the 17th. We are looking at just 33 stocks. We are on the back end of earnings season, but make no mistake, there are some big names declaring earnings this week, and you will want to stick around towards the end of the show because our trade from last week, you thought the trade from 2 weeks ago was good on Marvell. Just wait till you see what we did this week on Groupon. It was very, very interesting, so you'll want to stick around for the end. So welcome to Earnings Call. Let's get it going. Now, we do talk about a lot of stocks here, so don't hesitate to use the chapter feature at the bottom of the video to hop to each and every stock. We do have a bit of a list this week, as you see, even though there's only 33 stocks that I'm focused on this week. Here's a handful of them here, and they're divided up with the breakout potential stocks, meaning stocks that jump over 10% are on the left-hand side of the sheet, and stocks that are consolidating or pretty quiet, meaning they're going to move only single digits, they're on the right-hand side of the sheet, okay? And so you can see here, not much is going on here the first part of the week, but we get into Wednesday and Thursday of this week, and wow, this is when they really start hitting home. You can see Signet, Five Below, Williams-Sonoma, General Mills, Ollie's Bargain Outlet. That one of my favorite stocks to trade. Micron Technologies, always in the news. Jabil, FedEx, that's one of the biggest names this week is FedEx on Thursday. Lennar, Academy, Darden, and Nike. We're going to talk about all these stocks right now. So let's begin with the quiet stocks. All right, these are the stocks that, as I mentioned, move very little. And this is an example. Okay, this is not a stock that's going to be trading this week, but this is just an example of what a quiet stock looks like. As you can see here, the vertical lines represent the earnings dates. The ellipses on there represent the move in the stock. And Pfizer moves around 4% around every earnings announcement. It's a big company, been around a long time. And you can see that this stock was stuck in a trading range for over a year. And even through those earnings announcements, the stock just didn't move very much. That's what we call a quiet stock. It's only going to move single digits. So let's take a look at our quiet stocks for this week. And make no mistake, these can be some real money movers. As I mentioned, we have some well-known names like General Mills and Ollie, Lennar. But let's start looking at the charts. Let's start taking a look at what some of these stocks are going to do. General Mills is first on our list this week. And they announced on Wednesday, March 19th, before market open. Now, the estimated move here, and this is priced in the options, all right? So for quiet stocks, we like to do strategies like iron condors and condors. This is where we sell premium, and it's a protected position, so we're not selling options naked. But an iron condor is a four-legged trade where we're essentially selling a strangle and buying a further out-of-the-money strangle, all right? And I'll show you what that looks like here in a little bit, all right? So that's what we do. We like to sell premium around these quiet stocks. So General Mills is our first candidate here. They expect an estimated move of just 6%, and that's where the options are pricing in right now. Next on our list is Ollie's Bargain Outlet Holdings, okay? Just a funny name and a fun stock to trade. As you can see, this stock is a mover, but through the earnings announcement, it doesn't really move very much. Now, it moves just under 10%. Okay, it historically moves around 9%, so that is right on the edge of our criteria. And usually, because this is $100 stock, the options are pretty juicy in premium. Now, they are thinly traded, so we want to be careful in how we trade it. But this is always on our list of stocks to trade, and a very good candidate each and every time they have an earnings announcement. Now, Home Builder is on our list this week. This is Lennar popping up here. Lennar is, just like all home builders, has been really under pressure. we're not really worried about the long-term trend. We're focused on just the earnings announcement because earnings can often change directions of trends. Okay, any positive results, any surprise announcements, any positive outlooks can change the direction of a stock. So Lennar here has an expected move less than 7%. It is a quiet stock around each and every earnings, and they have earnings on Thursday, March 20th, after market close for Lennar. So we will get one of the home builders here describing what their results are, and let's see if we can't change that trend. This stock has gone from 190 to 120, okay, in about 4 months. I mean, 5 months. It's been quite the sell-off for the home builders. Moving on to retail here, we have Academy Sports and Outdoors. They will have earnings on Thursday, March 20th, before market open. Okay, so Thursday morning, the expected move here is less than 8%. Okay, so options are pricing in right now a pretty quiet move, less than 8%. And usually doing an iron condor on this type of stock when it gets down into the 40s is still available, but it gets to be a little bit more challenging at times. And as you can see, we want to do this right before the earnings announcement because the stock does trend. I mean, it does. It went from 45 to 60 in a little over a month, and then from 60 down to 45 again in about 3 months. So it is a mover, and when it trends, it really trends. But through the earnings event, only about 8%. And then we get to Darden restaurants. All right, another, are people dining out more? Are they dining out less? We're going to see the results from this big restaurateur here on Thursday, March 20th, before market open. The expected move here is only about 8%. And this is another very nice premium stock. Stock's trading at 187.47 right now. So, being in the upper 100s, there's going to be plenty of options available that are nicely priced. And with the implied volatility rushing into the options, we should be able to get a nice trade off if we choose to do a trade. It's all about where the options pricing is right before the earnings announcement. That determines whether or not we put on or apply the trade. Now, another well-known name is Nike. This used to be on my breakout candidate list. Okay, this used to be a big mover, but not so much anymore. A Nike will announce on Thursday, March 20th. The stock is trading around 73.44. The expected move here is less than 8%. All right, less than 8% for Nike. It just doesn't move much anymore. And that earnings announcement is after market close on Thursday. Sorry, that's not on the chart there, but it will declare Thursday after market close. So we have quite a few on Thursday morning and Thursday evening. The only one we're focused on Friday, believe it or not, is Carnival Cruise Line. Always one to watch. The hospitality and kind of vacation segment, they will announce Friday, March 21st, before market open. And the expected move here is less than 8% for Carnival Cruise Lines. All right. And, they've been pretty consistent in their single digit moves. And we expect the same thing. And the market expects the same thing for later this week. So right now, the options are pricing in a move less than 8%. And we will be keeping our eye on it. The stock's having a good day today, up 4.5%. And it's not even earnings yet. So the stock can move. We'll just keep our eye on it. All right. Now, so that's it for the quiet stocks. Okay. Now we get into the exciting segment on the breakout stocks. These are stocks that are the big movers. They are a lot of fun to trade. Yes, there is a little bit more risk in these because they do move. And when they move, it is great. When they don't move, it can cause problems. All right. So just want to let you know. But this is an example. This is the Akamai is not trading this week. This is actually the last earnings event was just a few weeks ago. But this is a notorious mover. I mean, Akamai moves double digits on a consistent basis, and you can see the gaps in the chart. Okay. just looking back in time, looking at what we call the statistical or historical volatility of a stock. You can see Akamai is always on our list because it is a big mover, and we had a good, solid trade on this stock after the last earnings announcement. So let's take a look at our list this week. All right. Again, the concentration for stocks is on Wednesday and Thursday. All right. And we begin with Signet on Thursday. So let's jump to the charts here real quick and take a look at Signet. Now it's beginning to consolidate. Now the pricing for Signet is coming in a little over 15% right now, and that this is a historical mover. Now here's the thing: if Signet, it's all about the pricing on the options. Now with these stocks, all right, we like to do straddles and strangles. And we do have publications that I generate each and every week for both quiet stocks. Those are in our delta neutral income portfolio, and breakout stocks. This is considered a breakout stock. This is in our delta neutral breakout portfolio. Okay. Now, if the options are priced well, and we can get options priced, well below that 15% number, that would make it a candidate for a straddle or a strangle. However, if the options are priced at 15% and you put on the trade and the stock only moves 10%, still move double digits, but that's not a winning combination right there. So that's why pricing is critical. Signet, again, if the pricing is there, we would do a straddle or strangle on this. We would be buying high implied volatility, make no doubt. Implied volatility on the options around earnings is very high, and you've probably learned a long time ago you buy straddles and strangles in low implied volatility. Well, there should have been an asterisk by that because you don't get that around earnings announcements. And earnings announcements are one of the few things that make a stock really move on a regular basis. Okay. Every quarter, they have the potential for a stock to make a big move, especially ones that have a history of doing so. So Signet will announce on Wednesday, March 19th, before market open. The expected move, as I mentioned, is greater than 15%. Now, Five Below in the retail space, I believe they are going to declare, I don't have my box on here. Let's just pull that up. Missed my box there. They will declare on Wednesday after market close, okay? After market close, and the estimated move here on Five Below is going to be greater than 15%. Okay. So I knew I didn't get my box written on one of these, and this is Five Below, but greater than 15% is the estimated move here. And again, it's all about the pricing and the options. Okay. And we're looking to get straddle or strangle off with an estimated move, hopefully around 12, 11%. And then the historical move comes in and we get a profitable trade. And I'll show you an example of that here in just a little bit. Okay. Next on our list here is Williams-Sonoma. Now, this is historically a big mover, believe it or not. I mean, just look at the last earnings event, actually is right here. You can see the move that this was on back in November, this gap higher, big move. And previously, look at this was actually not a winning trade, but look at the volatility in the candle, because we call this a whipsaw action. Okay, gap higher and then boom, trade lower. Okay, but when you get a gap higher and then that follow through, that's when you have the big wins on straddles and strangles. And so we are looking for that to happen. Again, Wednesday, March 19th, before market open. The expected move here right now, options are pricing in a move greater than 15%. So we will see if that plays out later in the week. Now, a couple more left here. Micron Technology. Boy, look at this thing. This thing loves to gap. This thing loves to move. Okay, a great stock to trade if you know how to trade certain types of stocks when they have this type of volatility. This is a fun one to trade. Buy on those lows, sell on those highs, winning combination on a consistent basis, believe it or not. All right, so Micron Technology here has a announcement on earnings on Thursday, March 20th, after market close. The expected move, once again, here's another one, greater than 15%. So we're expecting big news from Micron Technology. Now, here's the thing. You can see that the stock has really rallied. It's up another almost 3% just today. I do prefer these things to consolidate, kind of like it was doing back here in November, December, where it was just kind of chopping sideways. It did gap up right before that earnings announcement, but then boom, down it went. That's okay. That consolidation right here, and then the stock moved. So, um, it's okay when they start to move, but oftentimes, if they don't have this regular pattern, it's a challenge. But Micron Technology does have that regular move right before earnings, and then boom, either move higher, move lower in a big way. And we are expecting, the market is expecting greater than 15% move for Micron Technology. All right, jumping ahead to another interesting stock. This is Pinduoduo or PDD Holdings. This is always on our list of breakout lists. We've had great success with PDD for some time. They will announce on Thursday, March 20th, before market open. The expected move here is greater than 11%. Sometimes this stock just definitely does move. I mean, it moves even greater than that. And right now, it's having a great day, up over 5.9% on the day, and heading into earnings events. Man, there may be somebody knows something here. Okay. We will see. But if we can get a straddle or strangle off and at a good value, then we will definitely look at Pinduoduo or PDD Holdings here for that type of trade, straddle or strangle, as we head into the end of the week. Okay, another one is Jabil, the symbol JBL. Okay, they have an earnings announcement here on Thursday, March 20th, before market open. The expected move here is greater than 12%. And, you can see that this stock is a historical mover. Even though it consolidates, you give it a month, and this thing can really take off, or it can really drop. All right, so now it's found its bottom. It almost looks like the S&P 500 here is what this chart looks like. Okay, S&P is also up, having a good day, and so is Jabil. It's up 2.59% as we are talking here, and we'll see what their results are as the market expects a good double-digit move for Jabil later this week. And then really the bellwether and what everybody is focused on this week is going to be FedEx. They will announce on Thursday, March 20th, after market close. The expected move here is greater than 12%, and we will really see how if people are spending on packages and delivery, and it is always under scrutiny, and especially their outlook is always under scrutiny, just like UPS and others. People watch this very closely. They will announce again Thursday after market close. That's March 20th. The expected move is greater than greater than 12%. So double-digit move expected for FedEx. So let's take a look as we wrap up our list today, just so you can kind of see our sheet one more time here. We talked about most of these on Wednesday and Thursday, and then Carnival on Friday is also going to be scrutinized pretty heavily as they are kind of a bellwether for the cruise industry. So, but a good week, even though we have kind of a quiet week with earnings. We're on the backside of earnings season, but we still get these big names, and we still get these great opportunities each and every week. So be sure that if you want more information, you can download a guide. We'll put up the link here in a moment. That's at ewotrader.com/straddle. You download that guide, and it has our contact info in there, and you can be sure, and we'll reach out, or you can reach out to us if you want to learn more about our delta neutral breakout or delta neutral income portfolios. Now, I'm going to talk about each of those right now, actually, as we talk about the trade from last week. All right. Our trade from last week was on Groupon. All right. Who knew? I didn't know. I mean, I'm always reminded. I never think about Groupon other than around earnings. And the stock, look at that. It had that little bit of consolidation as it went into the earnings announcement. All right. You see the flat bottom. Now, I remember talking last week. If you saw last week's video, I talked about that some of these straddles and strangles get pretty expensive. Like a straddle on or strangle on FedEx, because that's a $200 stock, that's going to cost you quite a bit of money. It's going to cost you a couple of $1,000s. But Groupon here is an example that we do find very inexpensive straddles and strangles for our publication and for our subscribers. Okay, this trade was $185. All right, $185 per straddle, or in this case, strangle. A strangle is noted by the flat bottom on the black line here. The flat bottom is a strangle. So we were using two different strikes, a put and a call, two different strikes with the same expiration. And what we were doing was we were expecting a big move for Groupon. So let's see where we are today. We put that trade on last week, and let's see where we were today. Take a look at this. A big move. We call this a home run move. All right, a home run move on Groupon because we got a triple digit return, 154% move in just 7 days. Yes, that profit is $285. Now, before you start thinking, well, that's not very much money, remember our debit was only $185. Even if you had a very small account, say of $10,000, you could do 3 contracts, which would only have been $555. Okay, 3 contracts would have been $555 for the $185 per strangle. All right, and then you would have $885 today. Now, when you net that out, that's an 8.85% return on portfolio in a week. Okay, that is the power of both of these strategies. Okay, when you combine them together and you find good, solid opportunities where the pricing is right and you have a consistent performer on your hands. So, what do we have in store for you this week? Well, as I mentioned, Groupon was from our Delta Neutral Breakout portfolio. Now we have one from Delta Neutral Income. And I talked about it earlier. I always like trading Ollies, and that is our trade of the week. We're going to trade an iron condor on Ollie's bargain outlet. Okay, now an iron condor is essentially a bear call spread and a bull put spread done at the same time. All right, so you're selling call spread and you're selling the put spread at the same time. It's called an iron condor. It's a standard trade. It does have 4 legs, and I can see from the risk graph. The risk graph. Don't mind the red, blue, and green lines. Just focus on the black line. Every time the line changes directions, that's a strike. So coming down from the top, I know that I'm buying the 120 calls and selling the 115 calls. Okay, so you buy the higher, sell the lower. That's a bear call spread. And then on the downside, we're buying the 85 puts and we're selling the 90 puts. All right, so you buy the lower, sell the higher. On the put side, that is a credit spread. You combine those 2 credits together, and you're going to get a credit of about 100. Last time I looked, it was a credit of about $155. That means your risk is going to be around $3.45. Why? Because it's a $5 spread. You subtract out your credit, and that's going to leave you a debit. Now, why would we do a trade where the risk is greater than reward? Because of the odds and probabilities. The probabilities are here that Ollie's is going to move less than 10%. It's going to move hopefully 9% or less. And our break evens are a little wider than that. Okay. So that is where this, and they expire this Friday. All right. So with Ollie's having earnings on later this week, and with options expiring this Friday, this is a very short-term trade. So after the earnings announcement on Wednesday, we'll have a drop in implied volatility. The IV crush will come down. We get to keep more of our credit as long as it stays between those break evens, the upper break even and the lower break even. So that's our trade of the week on Ollie's bargain outlet, an iron condor. This is a type of trade that we do in our Delta Neutral Income portfolio, and that is our trade of the week. All right. So I hope you enjoyed the show today. If you liked what you see here and you like the content, please give us a thumbs up and then subscribe so that we can reach out to more traders just like you and have a positive impact on their trading. So each and every week, remember, trade small, trade often, keep at it, and I will talk to you next week. Take care.